morning, guys. You can see time is around 7:56. Let's look into Bitcoin trade analysis on Friday, Saturday, and Sunday. And first, let's look into higher time frame analysis and see, which I have already mentioned to you. Once this liquidity has been taken, and you can see market failed to make a lower low. Instead, the market broke towards the upside. Market went all the way, grabbed this liquidity. This was an insider candle, guys. You can see clearly. After this, the market closed below this range. The open high strategy, guys. This is an open high strategy. So what you can see is that the market rejected price from these lower levels and closed between this range. And for the next target, what we can see is to target this higher level. But you can see the next day the market formed an inside candle. So and the market closed below this range. So what we can expect is to go low, and the market broke this low, rejected price from these levels, and again the market closed above this, breaking this high. And another day was the insider candle, and the next target was the high of this candle. So you can see this high was being taken out, and after that this high also has been taken out. And after this, the market here broke this high, closed between this range. And another day the market consolidated. You can see this kind of consolidation for many days. Whenever the market breaks this level, consolidates, and again further moves towards the upside. So you can expect the market in another 3 to 4 days targeting these levels, guys. So the first target is this level over here. So you can, and the next target is around this level here. These are failure swings, guys. You can see here there is another one failure swing, one failure swing, one failure swings, and failure swing. So you can expect the market breaking these levels, and you can definitely expect huge candles here and market breaking all these levels, guys. And you can expect a very good bullish momentum. So you should always look for call sides, guys, from here on. You can see the market ended its down phase here, swept this liquidity, and this is the high resistance liquidity zone. So as you can see, once the market swept this low and breaking towards the upside, so this is a high resistance liquidity, and there is very low chances the market breaking these low levels before the market breaking these highs. So there is a very good chance that the market might break towards the upside. So I should always look for call sides, guys, for the next 1 week. You can expect any internal structures like these bearish candles, but definitely the market sentiment is bullish, so you should always look for upside. So you understood what I'm saying about the high and low, guys, open high low strategy. So let's look into a daily time frame analysis and see how the market here behaved on Friday, Saturday, as well as Sunday. And if you look into a shorter time frames analysis here, you can see the market broke this liquidity over here, swept this liquidity. You can see this is a very good liquidity over here, and closed below this range. And after this range, the market, we could have expected this target towards the downside. So this is what we could have expected. This after the market sweeping this liquidity, you could have expected. But here the market again rejected price from this 9S plus 21 moving average and closed below this range. So for the next target, what we could have done is to target this liquidity. And you can see clearly the market here. You can see the market formed a two insider candles, but definitely the market sentiment was bullish. And what you can see here is that the market here failed to take this liquidity over here. Instead, the market formed two inside candles, and definitely after this candle, the market swept this high and closed between this range. So for the next target, we should have looked for this low here. This is where we could have targeted. And for this day, you can see the market rejected price from these low levels, as same as the 9S 21 moving average price rejection here. This is also price rejection, and the market closed between this range. And for next target, we could have targeted this high and this high. You can see after this, the market showed a very good bullish momentum and even targeted this, broke this high as well. And even there is high chance that the market might break this as well as this high. So you understood, guys, open high low strategy which I am explaining. Whenever the market closes between these ranges, right, you can see the market swept this liquidity and closed between this range. And for the next target, we should look for this low. And you can see the market targeted this low, swept this liquidity, and again closed between this range. And for the next target, we should look for this high. And after this high, guys, what you can see, the market here failed to sweep this high. Instead, the market showed some kind of bullish momentum. After this, the market formed an insider candle here, failing to sweep either this high or this high as well. And you can see the next day, the market here opened, swept this high and closed between this range. And for the next target, we should look for downside. And here you can see the market swept this low and closed above this range, clearly signifying a lot of bullishness over here. And after this, you can see you could have targeted towards the upside, target aiming this high as your target levels, this high as your target levels, this high as your target levels. And you can see this one huge bullish candle broke this highs, this high, and even this high. And you can expect the market to come all the way to this high or this high as well. So you can expect a very good bullish momentum, as this all these swing highs guys are failure swings. So even this is a failure swing, this is a failure swing, and this is a failure swing. So you can expect the market to even break these levels, break these levels, and break these levels also, as long as the market. And you can expect some kind of resistance here guys. This is where some kind of resistance level is there, so you could expect some kind of rejection from this level. So you can expect a market going all the way to these levels, not with one bullish impulsive candle, but definitely over a period of time you can expect the market to come all the way to this level. So this is about my intraday bias guys. So I hope you're understanding what I'm saying. So let's look into the swing highs over here and break that level, break it into it. You can see there is an insider candles over here. Let's mark this swing high, and that's an important level, and marking this swing low is an important level over here. Since the market swept this high and came below this low, and market swept this low and closed between this range, so these two swings are very important guys. So let's try to mark it out. So let's look into a 5-minute time frame analysis and see. Let's look into higher time frame, and you can see this low has been taken and market immediately reversed into the range, and this high has been taken, or you can consider this high over here as well. So this high has been taken and market closed between this range, and this is the inside candle guys. You can say after this kind of huge bullish momentum, the market just traded it inside. So this was one on Friday, Saturday, and Sunday. Let's look into trade analysis of Friday, Saturday, and Sunday, which I have failed to upload. So I will definitely uh, recording this video right now. And you can see this was our target levels guys. After the market swept this low and came above this level, this was our target levels, and you can see the market failed, and here the market swept this high and closed below between these ranges. So you could expect this low to be taken, and you can see mother again sweep this high and continued further bullish. So what we need to see is on Thursday, and you can see this kind of huge bullish momentum and this swing over here. So let's consider in a shorter time frame, and you can see this huge impulsive momentum change the market sentiment here from being bearish to bullish guys. You can see how the market here, after this kind of huge bearish momentum over here, the market immediately reversed over here, and market failed to make a lower low. Instead, the market here showed some kind of bearishness, and suddenly the market reversed towards the upside and failed to make a swing high over here or sweep this liquidity over here. But what you can see is definitely the market here came and mitigated this fair value gap. You can see there is a fair value gap over here, and market mitigated this fair value gap, or you can consider the order block levels over here. So what you can mark is to mark the order block level here. And if you try to mark the propulsion block, and if you consider the low to high of this candle, you can consider the upper part or the above fair value gaps as your order block levels, and you can see the market came and mitigated. But let's look into a shorter time frame analysis and see what's happened on Thursday, as on Friday, guys. In Thursday video, I have definitely explained to you how the market behaved. So let's try to plot the VWAP level here and see how the market here behaved. And looking at into previous swing structures, let's analyze the trade and see. Here the market clearly broke structure towards the downside. You can see a clear chalk formation over here. But after this, the market here also showed a very good bullish momentum. You can see there was a chalk over here as well. So what you can consider here is that the market breaking structure towards the upside as well as downside as well. So if you consider this swing impulsive momentum towards the upside, and if you try to mark the low to high of this candle over here, you should mark the 50 levels over here. Or what we need to mark is the premium and discount zone, guys. So let's mark the mid of this candle over here. This is the mid of the swing momentum which happened over here, and what you can see is the market trading to the discount levels here. And in this discount levels, we need to find out the fair value gaps or imbalance over here. So definitely here in this swing structure over here, what you can see is that here definitely the market is showing some sort of imbalance over here. You can see this kind of imbalance, and if you try to mark it and extend it towards the downside, you can see. And you can expect another imbalance over here, guys. You can see there is here another imbalance, so you can expect the market to come and mitigate this imbalance as well. So if you try to plot these two structures over here, because this swing structure guys changed the whole sentiment of market from being bearish to bullish. And even though the market showed a huge bearish momentum like this. The market after this tried to move towards the upside. And if you try to mark this bearish momentum fair value gaps, you can say all these levels has been mitigated with this over here and this over here. So what you can consider is to look for upside itself, and you can see how the market here came all the way, mitigated these loans, and continued further bullish momentum towards the upside. So let's try to decode this trade and analyze how the market here try to behave. So you can see a clear market structure shift over here. So if you consider this swing momentum, and if you try to mark the high of this candle to the low of this candle, what you can see here is that there is a fair value gap here, guys. Definitely, you can expect the market to come and mitigate this fair value gap over here. This is a fair value gap, but the market here failed to mitigate this fair value gap. Instead, what you can see here, this was the day's open range. What you can see here is that the market here came, and you can see this is the equal liquidity. Here is liquidity over here. Here there is liquidity, but you can see the market taking support from this 200 moving average here. But you can see after this kind of support, the market clearly broke structure here. This is on Friday, guys. You can see a clear break of structure towards the upside in a 5 minute time frame. I'm explaining you. And in case if the market sentiment would have been bullish, guys, the market would have continued taking support from here and retracing to the 50 levels or the 9 as well as the 21 moving average or the VWAP levels and continue further bullish to mitigate this fair value gap over here. You can see there is some fair value gap over here. So you could expect some market to mitigate this fair value gap and continue further. But instead, the market clearly broke towards the downside, or you can expect the order block level here. So the market came and mitigated this 5 minute order block, and the market here taking support from these levels and could have continued further towards the upside. But instead, the market again broke structure towards the downside. You can see again the market clearly broke structure towards the downside. You can see this is a clear break of structure, guys. This market breaking these levels clearly changed the market sentiment from being bullish to bearish. And you can see even this low also has been taken out, and this order block once mitigated doesn't hold any value. And what we need to focus here is that this swing momentum over here. So if you consider this wave momentum, the high of this candle to the low of this candle, or if you consider the common point between this to the common point between this, you can see this is the 550 level, guys. This is the 550 level where market price came and mitigated this 550 levels. Or in case if you try to plot this swing over here, the low to high of this candle, and what we need to mark is the fair value gap above the premium zones. And you can see this is the fair value gap, guys, where the market came and mitigated this fair value gap. You can see the market mitigated here and the 50 levels also. So what you could have expected is to draw fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted the 1.68 level over here. You can see the market came all the way to this 1.68 level, targeting the 1.68 level or the 100% level over here. You can see this is the 100% move. Keeping your short position after this kind of huge bearish candle, guys, or you could have easily entered here itself. Keeping your short position here and targeting all the way. Or in case if you consider this retracement levels towards the upside, once if this 50 levels has been broken, you could have entered a short position and you could have captured it all the way to this downward momentum over here, the 100% move over here, as well as the 1.68 here. So I hope you're understanding what I'm saying, guys. You can see after this impulsive candle also the market breaking this low, so you could have even taken this position as well. So if you consider this momentum over here, you can see the market rejecting price from 50 levels here as well, rejecting price from these levels and breaking this low. And this was a first chalk formation. After this, the market broke structure towards the downside. And what you could have looked for target levels is this liquidities over here. As you can see the market here, after this kind of huge bullish momentum, you could have expected the market to retrace and mitigate this fair value gaps over here. So you could have even targeted it all the way to this fair value gap also. You can see once if this fair value gap has been mitigated, you could have expected the market to continue further towards the downside like this, or to mitigate this fair value gap, or you could have expected some kind of reaction towards the upside. And what you can see here is that the market is definitely heading bearish only. As you can see, rejection of price from this moving average, and you can see again the market here very impulsively broke structure towards the downside. And if you consider this swing momentum over here, the high of this candle to the low of this candle, you can see price rejecting from 0.38 level over here, which coincides with the 0.38 level, you can see. And since this fair value gap has not yet been mitigated, so you could have expected some reaction and coming all the way to these levels. So if you try to plot the fib extinction levels here, guys, the high of this candle to the low of this candle to the high of this candle, you can see you could have targeted it all the way to this 100% move. This is the 100% move, guys, where you could have targeted. So the short position here, keeping your stop loss just above this candle itself and targeting it all the way to this 100% move. This is how you could have targeted. And after this kind of momentum, you can see the market here failed to make a lower low here. Instead, the market broke structure towards the upside here. You can see a clear break of structure with a very good impulsive momentum. You could have even captured this move also, as you can see clearly. After this, the market rejecting price from VWAP levels, and you can see clear break of structure here as well. And again, you could have traded these levels over here. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, see you can target the 100% level here, but the market failed to come all the way to this 100%. Instead, the market broke structure towards the upside. And if you consider this swing momentum move here, you can consider this whole swing momentum, because if you consider this retracement levels, guys, and if you try to plot this level, you can see the market retracing to 0.38 level. But what we need to consider is to consider this whole structure as one swing momentum which actually broke structure towards the upside. And if you consider the common point between that to the common point between this, you can see the market again taking support from 0.38 level over here. And for this retracement level, you could have plotted the 0.5 levels. So in case if this 0.5 levels has been broken towards the upside, so this is a 0.5 level over here. This is the 0.5. You can see clearly the market after this kind of bullish momentum, the market showed some kind of fair value gaps or imbalance candle. And what you can see is to mark the common point between this to the common point between this, you can see the market taking support from 550 levels. And if you consider the whole swing, the market taking support from 0.38 level. And if you consider this retracement levels, guys, the market clearly broke the 0.5 levels over here of this retracement. And here you can see the market breaking the 21 moving average, the 200 moving average, the 9 moving average towards the upside and closed above these levels over here, clearly indicating some sort of bullishness. So what you could have done is to enter long position after this kind of huge bullish candle, keeping your stop loss just below that candle itself. And for target levels, if you try to plot the fib extinction levels, they hide the common point between this to the common point between this to the common point between this. What you could have targeted is the 100% move, this 1.68 level, or you can see you could have targeted it all the way to 3.6 level over here. You can see this is the one target level where you could have targeted, or you could have targeted it all the way to this 4.26 level, guys, here. Or what you could have targeted is this liquidity where we actually targeted it. We thought of expecting the market to come all the way to that level. So you could have targeted this liquidities over here. This was a very good trade setup where you could have taken, guys. And you can see what the recent break of structure of this momentum as well. And if you consider this impulsive momentum, and if you try to plot the levels over here, the low to high of this candle, you can see price taking support from this optimum trade entry over here. This is the 0.5 as well as the 0.8 level over here, clearly indicating some sort of support. And you can see this is a failure swing, guys. You can see this is a failure swing. The market failed to grab this liquidity above and broke the structure towards the downside. So you could expect the market to clearly break this failure swings, and you could have even targeted this levels, also keeping your trade over here. Or what you could have consider is to consider this to be an order block level. You can see this is a clear order block level, and the market came and mitigated this order block level, and you can see this kind of bullish candles. So this is where you could have easily entered your long position and targeting towards the upside. And if you consider this swing momentum, you can see clearly if you draw to high to this candle, the market taking support from 550 levels over here. This is the 550 levels where price is taking support, and you can mark the order block levels also here. You can see this is a clear 1 minute, 5 minute order block. The market came mitigated this order block levels, and you can expect this high to be taken out because these are all failure swings. The market failed to close below these levels, and you could have considered the market to continue further bullish momentum. But what is our target is this liquidity over here. So you can expect some kind of reaction. You can see the market went, grabbed this liquidity and immediately showed some kind of reversals and clearly formed a chalk over here. You can see a clear chalk formation over here. And after this kind of impulsive chalk formation, you could have waited for retracement. So if you try to mark the high of this candle to low of this candle, you can see the price rejecting from 0.38 level over here. This is the 0.38 level showing a clear bearishness, and you could have marked the fair value gap over here. Once this fair value gap has been mitigated also, so what you could have done is to plot the fib extinction levels, the on high to low of this candle to the high of this candle. You could have targeted it all the way to this 100% move over here. This is the 100%. I hope you're understanding guys what I'm saying, why you should have taken this trade. The short position here guys, giving your stop loss just above these time frames and targeting it all the way to this 100% move. You could have even taken this trade, but definitely this was one beautiful trade where you could have taken because of this failure swings. You could have expected the market to retrace, guys. So after this kind of bullish candle, also you could have taken. Or in case if you try to plot this swing over here, once if this 250 level has been broken, you could have expected the market to trade towards the upside. And since the market showed some kind of huge bullish momentum, and after the retracement, you can see there is no much. The second wave is also not so bullish, but definitely third wave comparatively less. So you could expect some kind of reversal as well. And you can see the market came all the way to this 100% move, grabbing this liquidity, and this is an external liquidity, guys. So this is very important. After this grab of external liquidity, the market will go and target the internal liquidity, and the internal liquidity was this fair value gap over here. You can see after this the market here came all the way here to this levels as well. So let's try to decode it on what happened it on Sunday. You can see the market after this showed some kind of reversal, a very good reversal, guys. But the market failed to close above this high, clearly signifying bullishness, but not as bullish compared to downward momentum. And the market came and mitigated these order block levels and failed to make a lower low. You can see here there is an order block level. The market came and mitigated this order block as well as the fair value gap over here. So once if this order block has been mitigated, it doesn't hold any value. And you can see again price taking support from this order block level as well. And market here broke structure towards the upside here. You can see a clear break of structure, and but market failed to mitigate this fair value gap. You can consider the market trying to mitigate this fair value gap. You can see even though the market had mitigated this fair value gap over here, this fair value gap again the market mitigated the fair value gap above as well. So the market tried to move in a sideways range between this low here and this high over here. So you could have taken short scalps like after seeing this kind of huge bullish candle breaking the 200 as well as 9 as well as 21 moving average. You could have either take long position here, keeping your stop loss just below this candle and targeting this swing high. Definitely there are so many scalps, guys, you could have taken like this, but I would not recommend you to take like this with short scalps, but definitely you could make a decent profit even in that, guys. If you try to plot the fib levels over here, the VWAP level, what you can see here, what happened here is that the market is trying to move between these ranges over here. As you can see, this range over here and this range over here. So what we need to see here, what happened between these ranges is that definitely the market trying to take support from this order block level here. You can see there is some order block level here. And what you can see here is that with this candle breaking this impulsive momentum towards the upside, you can see the market clearly broke structure. And again, market came and mitigated the optimum trade entry. So what you can consider is to mark the low of this candle and to high of this candle. We can see the market came all the way to this optimum trade entry, guys. So what we can try to is optimum trade entry. This is the optimum trade entry zone, guys. You can see the market came and there was fair value gap over here. So what you could have done is to mark the common point between this to the common point between this to the common point between this. You could have targeted the 100% move, or you could have tried your stop loss all the way to this low after this kind of impulsive momentum to target these levels. But definitely the market here failed to make and break the swing high over here. You can see this is the 100% move. And you could have taken a long position here, keeping your stop loss just below that candle itself and targeting all the way to this 100% move. But what happened here is that you can see The market here retraced to this levels over here. And if you consider this impulsive momentum, the low of this candle to high of this candle, you can see a market retracing to 0.38 level over here. And you could have tried your stop loss all the way to this level. But here the market failed to make an higher high here. You can see the market failed to make an higher high. This is a failure swing. So instead of making a higher high, the market broke structure towards the downside. You can see clear chalk formation over here. And again, the market showed some kind of bullish retracement, bullish momentum, but definitely again the market broke structure towards the downside as well. This is the chalk formation over here. So if you consider this impulsive momentum towards the downside, and if you try to mark the high to low of this candle over here, what you can mark it is the optimum trade entry over here as well. You can see this is the optimum trade entry, guys. And see this is the optimum trade entry where you could have taken short position. So of this swing momentum after this breakout structure, or you could have either entered at the 50 levels, but definitely what we need to see is the either to break the neckline over here to take short position, or what usually I trade is to mark the levels of this candle. And once if this 50 levels has been broken towards the downside, this is where I'm going to take a short position, guys, keeping a stop loss just above this retracement levels itself. So what I could have taken is that you can see after this kind of huge, the market even broke the neckline liquidity here as well. And again, the market retraced to these levels. And if you try to plot the high of this candle, the common point within this to the common point within this, you can see the market here rejecting price from 0.38 level over here. This is the 0.38 level where price is rejecting. And after this kind of huge bearish engulfing candle is where you could have easily taken short position, keeping your stop loss just above that candle. And for target levels, what we need to consider is not the first break of structure and the optimum trade entry retracement levels. So if you consider the compound and this to the high of this candle to the high of this candle, what you could have targeted is the 100% move over here, the 1.68, the 2.68 level, the 4.6 level over here. But you can see how the bearish the market is. And if you try to plot the retracement levels, the common point within this to the common point within this, you can see the market came all the way to this fair value gap mitigated these levels. So you could have easily targeted it all the way to this level, guys. The fair value gap or the unmitigated zone over here. You can see this is where you could have easily targeted with a very small risk to reward ratio. And you can see as long as the market is trading below the 9 moving average or the 21 moving average, you could have traded. And definitely here the market broke the 9 as well as 21 moving average with kind of impulsive momentum, forming a chalk as well. And this is, you can consider this to be a market structure shift. And this market structure shift happened at an important levels because here you can see the market here showed some kind of fair value gap here, and the market came and mitigated this fair value gap, not breaking below these levels, and market showing a chalk formation, which kind of huge bullish momentum, clearly signifying some sort of bullishness. And what you can mark is to mark the low to high of this candle, and you can see the market taking support from 50 levels over here. This is the 50 level where price is taking to take support, and market again broke structure towards the upside, clear breakout structure. So in case if you try to take, could have taken a short scalp, what you could have done is to mark the common point within this to the common point within this to the common point between this. You could have targeted the 100% move over here. But what we need to see here is that if you consider the swing momentum over here, guys, the huge impulsive momentum, you can see this level over here to this momentum over here. You can see the 50 levels has been the 50 levels is here. So what you could expect is the price rejecting from these levels and continue further selling towards the downside. But what we need to see is that the market target levels is this liquidity here, guys. Once if this liquidity has taken, we look for the close position where the market closes. After that, we'll take a long entry. So what I'm telling is that you can see clearly the market here targeting this low, guys. This low is what we have expected. This low over here as well as this low over here is what we have expected. The market came, took this both lows, and what we need to see is the close of this candle. In case if the market sentiment was bearish, the market would have broke towards the downside, even close below these levels, and the next target would have been for another low here. But definitely we should look for the close levels. And what happened is that the market rejecting price and closing above these levels, clearly indicating some sort of bullishness. So let's look into a smaller time frames and see how the market here behaved. So you could have expected after this kind of huge bearish momentum, the market retracing to 350 levels as well as the 200 moving average and continuation of price towards the downside like this. But instead, the market broke towards the upside. That's why we should always not trade in this position and you should always wait for the close. And since the market closed above these levels, clearly indicating some sort of price rejecting from lower levels and showing some kind of dominance, you should look for upper levels as your target levels. And let's look into a price action here and see how the market here is behaving. You can see a price taking support from 50 levels and even broke the structure towards the upside. And again, the market came and if you consider the order block levels here, mitigated these order block levels and found a chalk over here. You can see clear break of structure towards the upside, or you can consider a break of structure. You can consider this also as a break of structure, guys. But what we need to see is this momentum over here. So you could have expected the market to mitigate this fair value gap also here, but definitely the market taking support from 50 levels and breaking these levels. Again, the market, you can't take trades in here, guys, but definitely what you can take trade here is that after this initial break of structure, what we could have marked here is to mark the common point between this to the common point between this. And what you could have marked is that another 550 level over here. This is the 550 level and you could have easily taken long position here, guys, keeping your stop loss just below this candle itself and targeted it all the way towards the upside. Or you can see after this kind of huge bullish candles is where you could have targeted. But definitely what we could have expected is that you can see keeping your stop loss just below this candle and below this low, guys. And in case if you try to plot the Fib extinction levels of this momentum, this was the initial trade setup, guys, where we could have taken because after this kind of break of structure, the market mitigated this order block. So what we could have done is to mark the common point between this, to the common point between this, to the common point between this. We could have targeted it all the way to 2.6 level over here, the 1.68 level. And so you could have easily targeted it all the way to this levels. I hope you're understanding, guys, what I'm saying. And after, if you consider this swing momentum over here, the low of this candle to the high of this candle, you can see the market again coming all the way to this optimum trade entry over here and mitigating this optimum trade entry zone and the market continuing further bullish. And you can see how the market is very bullish, guys. And always look for a daily time frame analysis, guys. You can see clearly what happened here is that the market, after grabbing these liquidities, the swing lows over here, external liquidity, again the market came towards internal liquidity, and after this internal liquidity, market is targeting the external liquidity over here. You can see the market coming and breaking these levels. I hope you're understanding, guys. In case if you don't understand, please leave a message below, guys, because what I'm teaching today is quite different from what I usually teach, because I'm teaching you about the swing lows, swing highs, external, internal liquidities, and failure swings, as well as open, high, low, close strategy as well. And there is a lot of advanced level of trading level, advanced trading techniques, which we need to follow to make trading decisions, guys. And what I'm expecting is that you can expect the market to be very bullish and even break these levels and these levels as well. So you can always take a long position only, guys, expecting the market to go further bullish. And you can see how the market here is trading above the 9 as well as the 21 moving average. And in a shorter time frame, guys, if you see here that the market here failed to make a lower low, instead the market trying to break towards the upside. And what you could have considered is that to mark the swing low to swing high. And once if this level has been broken towards the upside, what you could have done is to take long position here itself, keeping your stop loss just below that candle itself and targeting all the way towards the upside, guys. Definitely the market will not reverse here and the market will definitely break towards the upside. So even though the market here is showing some bearishness, guys, you can mark it out at around 835. Definitely the market will definitely move towards the upside, and my target levels in a daily time frame would be these levels over here. You can see these target levels and definitely even these target levels as well, guys. You can, after seeing this kind of huge bullish momentum, there is high chance that the market can even break this level as well, targeting it all the way to this level. So a very good risk to reward ratio, 1:7, guys. That's it, guys. That's it about my trade analysis. And I would like to teach you in a better format about each and every technique, guys. So in case if you find it helpful, please leave a comment below and I would explain and decode each and every trade. And I will definitely use anchor wave up levels, moving averages, and 200 moving averages for better confluences. But today, what I have thought is to aim on a higher time frame level target levels, and you could expect how the market behaves in a higher time frame. Definitely, you can eliminate all these noises over here. And what I have thought is that whenever you focus on a higher time frame, only then you can make good trading decisions, guys. So if you see, if you could have taken these trades, you could have made it very less profit, because what we need to look is a bigger picture. So when you try to focus your trades on a bigger picture, only then you can become a profitable trader and hold these huge trades. But definitely you could have even taken exit positions here or here after seeing this huge momentum over here, so you could expect the price to take support from these levels and continue further bullish. But when you know how the market behaves in higher time frames, definitely the market will target this low, and even the market can mitigate this fair value gap. When we have plotted this in a higher time frame levels, guys, definitely you can hold on to these trades and you could have made some decent profit throughout this momentum. So I hope you're understanding this. Please like, share, and comment, and share with your friends and family as well. In case if you find my videos helpful, guys, please leave a comment below, and I would love to read. And if you wanna comment on, if you wanna contact me, Instagram is the way to go. I have handled my Instagram over there, so you can message me directly. I would be glad to respond to you guys. Thank you.